Hello and welcome to the look ahead for Friday, the 14th of March. With me, Fiona Cincotta, Senior Market Analyst at City Index. So we will be continuing to monitor comments from Trump. Obviously, trade war and recession worries are front and central right now. We've also got UK GDP data coming in tomorrow, German CPI figures, and in the US session, we'll have Michigan confidence and inflation expectations. So just kicking off really with UK GDP expected to increase by 0.1% month on month in January. That's after a 0.4% increase in December, pretty much showing that the UK economy is stagnant, but holding up given the threats and the worries and the risks that there are, particularly with regards to trade tariffs, geopolitical problems, and also let's not forget that we do have the increase in employer tax on national insurance from next month, also increase in minimum wage. So there's quite a lot that potentially could be weighing on the mind of companies. So that's what's holding up things. As far as Bank of England rate cut expectations are concerned, the Bank of England is expected to cut rates by 25 basis points, fully priced in for August. Obviously, if we get a slightly weaker than expected GDP data, then that could move those rate cut expectations forward and potentially weigh on the value of the pound. That's also worth bearing in mind, although I do think in order for the rate cut expectations to really move significantly, then we do need to be looking at inflationary outlooks as well. This is the pound versus the US dollar. Obviously, on the other side of that, we've seen significant US dollar weakness last week. It weakened by 3.5% against its major peers. This week, the US dollar has steadied somewhat. It's only down 0.1% across the week. And it is actually, in fact, up today, as we've seen that whilst investors had been selling out of the US dollar as well as US stocks on those trade war and recessionary risks, the US dollar is now picking up a little bit of safe haven demand, which is why we've seen that steadying out. Now, obviously, it's really interesting. It's happened at a very interesting level, just shy of 130 for GBP US dollar. So we've seen this really phenomenal rally pick up from the low in mid-January at the 121 level, rebounded very sharply higher, particularly over the past week or so, last 10 days, rallying from that sort of 125 level up towards 130. We've seen the rise above the 200 SMA. We're trading above the 50 and the 100 SMA as well. We've also got the RSI just tipped into overbought territory as we reach that 130 level. And that's really interesting because we've seen this across many crosses that they had moved into overbought territory on that US dollar weakness. So the positions were looking a little bit stretched. We've seen this RSI is just coming out of overbought territory now, so we could actually see a period of consolidation around here. Buyers would need to get over that 130 level. I mean, if we got strong GDP data tomorrow, that could potentially move things higher. Obviously, if we get weaker than expected GDP data, as I said, that could increase rate cut expectations, which could see the pound drift lower. On the downside, support to be watching 128.50. Below that, we've got the 200 SMA at 127.95, so just around the 128 level. If we did get over the 130, next level to be looking towards would be the 131 level on the upside. That was a high that we saw back in mid-October last year. So also tomorrow, I mentioned that we do have the German inflation data. However, I think what's really overshadowing the German inflation data potentially tomorrow is these ongoing concerns regarding trade tariffs. Obviously, we heard from Trump today. Every day there seems to be sort of a new announcement or threat as far as trade tariffs are concerned. Today it was against Europe with the threat of 200% tariffs on alcohol from Europe, or wine particularly, I believe, if the tariff on US whiskey wasn't removed. So, every day, as I said, new threats and pledges for US trade tariffs. So the market doesn't really know whether it's coming or going. It's very difficult for companies to be able to plan, to be able to organize their outlooks, and not knowing whether they're going to be trade tariffs on what they produce or not. Obviously, that's affecting sentiment as well. We've seen the German DAX fell by around 1% today. It is down from that all-time high that we saw of 23,000, just below 23,500, just at the beginning of March, so a week ago. We've seen that very sharp sell-off on Monday. That's obviously as we had those trade tariffs on steel and aluminium imports from Europe, but we've also seen Europe respond with retaliatory tariffs. And that's obviously, again, the threat of a trade war between Europe and the US is sort of raising concerns over the outlook for the region. As far as inflation data, tomorrow is expected to confirm 2.3% annually. This is the secondary reading, so not as market moving often as the preliminary reading, and 0.4% month on month. ECB cut interest rates in the previous meeting. They are potentially moving towards an area which is more neutral, where they may pause rate cuts, but it very much depends on what sort of happens as far as trade tariffs are concerned, and obviously then what those impacts on the economy and the inflation outlook are. Just as far as downsides to be watching on the DAX, 21,150, that was the low that we saw mid-February. That could be a one to watch. And just above that, actually, the 22,250, that's the low for March. So just some levels to be watching out there. If we do get a break below that 22,150, that's going to create a lower, exposes the 50 SMA and the midpoint of that rising channel at 21,750. So that could then spark a deeper sell-off towards the 21,500 and even 21,000. On the upside, we're just testing that rising channel, the upper band of the rising channel as we speak. Obviously, the market's closed now, but if that level, if that support does hold, then on the upside, watching out for a move towards the 22,850. That was the high that we saw mid-February, before bringing 23,000 and 23,500 into play. Okay, so now let's just take a look at the euro US dollar and what's going on there. With regards to dollar weakness, we've seen that really helped the euro reach the 109.40 level. That was the upside that we saw in November, the peak. We have still since just come off that, and that's basically because of the concerns about the Europe becoming a target for Trump as far as trade tariffs are concerned. Obviously, the Eurozone economy is already weak. We've seen PMI data is showing sort of stagnation as far as the growth is concerned. The outlook's relatively weak as well. So if we then throw in with that a trade war with the US, and that could see things turn nasty. Obviously, we've got the US dollar weakness, which has helped the euro on the upside get up to that 109.40 level. We are just seeing a little bit of weakness now. The euro is trading around the 108.50 level. But the uptrend is still very much in track. We're above the 200 SMA, which is down at the 107.40 level. So buyers would need to be looking for a rise above 109.40. Got the RSI was been in overbought territory. That's just coming out now. So we could even see probably most likely some consolidation around this level. But buyers would need a rise above the 109.40 to bring 110 into focus. On the downside, as far as support is concerned, 108 level opens the door to 107.30. That's where the 200 SMA is sitting. Just finally, let's just take a look at what's going on with US stocks, because this is where the market is really showing those concerns regarding trade tariffs and the outlook for the US economy. We've seen a massive sell-off in US stocks over the past couple of weeks, and very sharply. I mean, 20th of February, we were trading at all-time highs. Now we've fallen below. That was at 61.40. Now we're trading down at 55.20. So almost down at the 5,500 level. Again, this is recession concerns. We've got the market sort of actually selling out of the US, concerned about how the outlook is going to be, particularly if we see Trump pressing ahead with all these trade tariffs, which are expected to be inflationary. Whilst inflation data this week has been supportive of sentiment, the market is fully aware that this data could turn rapidly worse. And if we do, because of the inflationary pressures expected from trade tariffs, and if we do see inflation pick up, but we're seeing growth slow, that puts that stagflation trend well and truly in place, which makes it difficult for the Fed to react to those low growth through cutting interest rates because inflation's too sticky. So difficult position for the Fed potentially coming up. Markets reflecting those worries by falling sharply. We're seeing the 50 SMA is dropping below the 100 SMA in a bearish signal. 200 SMA we've broken below that. Very oversold though. This is looking rather overstretched right now, but still we've got an bearish engulfing candle. So that's a fairly aggressive breakthrough that 55.50 target or support, sorry, that we were looking at. Buyers will really need to be closing above that level in order to bring any sense that the sell-off is steadying out. That might bring the RSI out of oversold territory, but I'd be cautious about selling at these levels given that RSI being so oversold. On the downside, support levels 55.00, 54.00 after that. That's the low that we saw in September. On the upside, we really need to see a rise above the 57.70 level, 200 SMA, also the low from January, mid-January, in order for this chart to have any sense of stabling out. So that is, we've got the University of Michigan conference, that's also tomorrow. I think that's going to be watched very closely because it's these forward-looking data points that have been showing the deterioration in sentiment, and that's where we've seen much of the softness. So the market's going to be watching that to see if that softness is continuing, and if it is, we could potentially see more pressure as far as the stocks are concerned. So that is everything from me. I hope you've liked it. And if you have, then please do give this video a like. And otherwise, I will see you tomorrow.